So, Currency Maestro, tell me what's going on with GBP versus USD right now, and what can we expect for the near future?
Okay, thanks for inviting us back, Richard. Let's start with a short-term view. Sterling has experienced a nice rally in the last 5 weeks, moving from the support level of 127, briefly trading near 132. This, as expected, is from further news about our most talked about subject, the ongoing Brexit negotiations, and also with a weaker dollar in general, something we highlighted in last month's briefing. From the 30,000 foot view, there definitely seems to be a demand for GBP, and I think trading desks are just waiting for further positive news before jumping into buy. 135 has been the high, give or take a few pips since last December. And this level has traded there twice, with both cases the pound falling back very quickly. We can safely say that 135 is a strong resistance level and should have stop loss and option strikes above it. This means that if the GBP trades above it, then a much stronger rally toward 140 could follow very quickly. Support for the pound is 130, that's the old highs. 129 is the trend line support, and at 127. So a quick note on risk. The US election is reaching its boiling point, as I'm sure we're all aware, and COVID is pushing more people to vote by mail. The November 3rd result may now then be pushed out for another 5 or 6 days, right? And that will cause the markets to trade on rumors and news stories, creating excess volatility as banks remove liquidity from the markets. Right now, there is expected to be a blue wave with the executive, House and Senate all flipping to the Democrats. If this does happen, it would most likely push US dollar 10-year yields to 1% or above, currently at 0.8% today, which hints to a stronger dollar. We don't believe this is going to be the case for the US dollar, though, with the election being just one input into the currency markets. And although it is an influencer, a Brexit resolution is much more important for GBP than higher interest rates. Our long-term view, COVID, Brexit, election results, and global interest rates remain the 4 variables that need to be considered when planning for longer-term management of sterling. We chatted about the election and Brexit last month. COVID's impact, though, it's a coin flip. Cases are increasing in Europe. We've got increased testing in the US, which can possibly skew the speed of rising case numbers. Boris Johnson spoke on Thursday and said another shutdown would not be in the interest of the British people, something of a controversy from what I think he's previously said. Many states in the US are beginning to close again. Illinois and New York leading the rise in cases, as well as moving toward a shutdown. These states will probably lose more businesses and most likely see a move out of those states to more open ones. For the UK, the impacts will be similar for businesses, closing down, bankruptcies, and so on. So in summary, we see the next several months as a roller coaster ride, really, for GBP. But overall, the pound should be higher back toward the 135 area. But, you know, as usual, this, of course, is our opinion.
As always, Mark. So what I'm hearing is, despite the doom and gloom, and there's plenty of doom and gloom, in general, you anticipate the pound going a bit higher, perhaps 1.35, which, you know, is below our long-term expectations and hopes for it, perhaps, but is still welcome news, I think, for many people holding pounds nonetheless. So yeah, we'll get through this election. We'll see what that has in store for us, and then we'll turn our focus back to Brexit.
Absolutely, yeah, absolutely. Great. Election and Brexit, they're the key events that are currently happening that we've got to keep an eye on.
But good news but I think for our purposes, good news that we perhaps can hope that the pound might trade closer to 1.35, say, rather than it going the other way, which I think a lot of people fear. Who knows? But that would be that's a welcome direction.
Yeah, so. Yeah. Well, let's see what the next 2 weeks are going to be pretty crucial, and then obviously leading into the first couple of weeks of November as well. So watch this space, right?
Watch this space, indeed. Great. Well, thanks again as always, Mark, and I'll check back in with you in a month, and we'll see what's happened.
Brilliant. Thanks, Richard. Take care.
Cheers, Mike. Bye bye.